Most people think that Pudgy penguins, so the Pengu token on the Solana chain, is yet just another meme coin. The same like Bonk or the Trump token or Fart coin or Dog with Head. But Pudgy penguins had been launched in a very different way. All those other tokens had a central group that fair launched the token at a very low price, at a very low market cap. And then it organically grew. More and more people jumped onto the project. Pudgy Penguins was launched by the centralized exchanges and by the market makers, and this does have implications on the price development. Now, this is not the first video on Pengu on this channel. There has been 8 videos prior to this one. At the beginning, so that was 168 days ago, the attention on Pudgy Penguins was very high. So that first video outperformed the average video. The average video being in gray and that specific video being this blue line. The most recent video, however, just performs according to the average. So it seems like over time, the attention for Pudgy Penguin went down. The market cap is quite significant. We are almost at 700 million. Now, this is an overview of all meme coins. Within the Solana meme coin market, Pudgy Penguins is at number 5. So there's only Trump, Bonk, Fart coin and Dog with Head that's larger. Now what's interesting is that Pudgy Penguins was one of the worst performers in the last week. And while pretty much everything went down recently, why is Pudgy Penguins underperforming? Here is one potential answer. And this also shows the difference of Pudgy Penguins to other meme coins. The project actually has some token inflation. So there are tokens that will unlock for the team and for the company, the Pudgy Penguins company. Now the problem is that even though this here is the official release schedule, sometimes we see over-the-counter deals being made. So sometimes the internal team is selling their allocation already before the unlock. They do this for a discount for people that are outside, and the people that buy the token that will also get the access to their tokens just after the unlock. They get the tokens for a discount, but they might not have a problem with that because they can hedge themselves via perpetual futures, via bets on the price. But more on that later. But basically, whenever there are future unlocks, imagine that sometimes those unlocks can already happen today. It's just not yet that visible. This mechanism is, by the way, what caused the massive Mantra DAO crash, the Ohm token crash. The details are explained in this video. So that's an interview of CoffeeZilla with the CEO of Mantra DAO. But let's get back to Pudgy Penguins. In the last month, not much has happened with the price. We went up, we went down. Net, we saw a small decline of 4%. Let's now have a look at what happened on chain. So when we look at the Solana chain, who bought and sold the token? How did attention develop over time, over that month? Here is the data. So on the left side, we see the number of recurring traders and first-time traders over time. There's a clear decline in the last month. So the attention is clearly going down. On the right side, we see the number of token transactions. Again, the momentum is clearly negative. However, the price didn't really move that much yet, right? One might expect that the price should decline much more when things on chain look that bleak. But what about when we zoom out a little bit, when we look at the all-time chart? So Pudgy Penguins performed very poorly, right? A loss of more than 80%. What happened on chain during that time? What we're seeing on the left is the trading volume in US dollars over time. What we see on the right is again the trading volume, but this time normalized to 100%. And we segregate that trading volume based on different wallet cohorts, as in how big is the wallet that's trading. Small retail is everything below $1,000 worth of Pengu. Medium-sized retail is up to 10,000. Large retail is up to 100,000, and the whales is above 100K. So we can see when there's a lot of trading volume, it's the larger wallets that tend to trade more. When there's less trading volume, it's a smaller wallet. We see the initial attention upon launch and then a second wave starting in April of this year. That's now coming down again. Over here, we've got the number of holders. So it's small retail on the left and it's the whale investor on the right. So to be counted for the chart on the left, a wallet has to hold at least 100,000 Pengu tokens. So at the current price, it's roughly $1,000 worth of the token. To be counted in the middle, it's $10,000 worth of the token. To be counted on the right, it's $100,000 worth of the token. We can see how the small wallets tended to rather hold and potentially sell in the last few days, but the whales tended to accumulate. And this gives us now a first idea. Pengu held up comparatively well despite the attention going down, and the reason is accumulation by the whales. Now, why did the whales buy? There might be something going on with arbitrage across the spot market and the perpetual futures market. Because when we look at the trading volume on chain on Solana, it's still very, very low. Again, Pudgy Penguins is the 5th largest meme coin on the entire chain. Yet, when we look at the trending tokens on Solana and we order this by liquidity, Pudgy Penguins isn't even in the top 100. It's not counted as a trending token. On the spot market, even on the centralized exchanges, we've got most trading volume on Binance with 21 million in the last 24 hours. On the perpetual futures market, however, we saw 66 million of trading volume. So there's much more trading volume with the bets on the price than with the token itself. And so really the price discovery happens on the perpetual futures market. When the perps see buy pressure, this will, through arbitrage bots, also trickle through to the spot market. And so really what you have to look at is the perpetual futures market. What's happening over there? In general, before we look at the perp market, have a look at this. This is Pudgy Penguins relative to Solana. Now this chart matters because this is a token launched on Solana, and so there's a direct connection between the SOL price and the Pengu price. But just have a look at how the token behaves. Most of the time we see the price going down, potentially because of OTC deals, people hedging their bets. And then whenever we see a rally, this happens extremely quickly. It almost looks like a short squeeze. It almost looks like price manipulation. But now again, the market starts to deflate, and probably we will see again a continued underperformance. But let's go now to the perpetual futures. Have a look at this. This is the funding rate over time. At the beginning, people were still optimistic, but now recently there are sometimes moments where the shorts have to pay the longs. That is not so common. So that means that most investors on the perps, they want to bet on falling prices. This is, by the way, also what's happening recently. Have a look at how much the spot price in yellow correlates with the open interest. So that's the area in green. There's a lot of common movement. And again, the more interest there is on the bets on the price, the higher the price can go. When the open interest goes down, when less people bet on the price, then the spot market follows as well. When the open interest goes up, the spot market also comes with it. The reason why the whales are currently buying is potentially because they think we could see another surge in open interest one more time. The liquidations are already starting to heat up again. And so when the smart money is getting in, it might make sense to sometimes copy trade. I personally stay away though. Again, I'm scared of the tokenomics, and I don't like that Pengu long-term underperforms Solana. I believe that over the next few months, we're likely going to continue that underperformance. Are we going to see another short squeeze at one point? This is probably what the whales are betting on, potentially, but I don't want to hold my breath. I rather wait for that short squeeze to happen, and then I bet on falling prices. I always want to have the macro picture in my favor. So in other words, when an asset tends to go up over the long term, I want to buy the dips. When an asset tends to go down over the long term, even if it's just relatively speaking to other assets, I want to short the pumps. So when something is going up, maybe because of a short squeeze, I want to then at the end of that squeeze bet on falling prices. I don't want to bet on the short squeeze to happen. I think that's pretty risky. It's the same thing as betting on falling prices for an asset that tends to go up over the long term. Having the overall macro trend in our favor, I believe, makes sense. And Pengu long term is likely going to continue to go down. It had been engineered as a money grab from day one. It was launched by the market makers and the centralized exchanges, and it's likely going to continue to see price manipulation going forward. Now, to a degree, the crypto market is just a reflection of unregulated life. As in, most gains come just to a few people, to a few assets. The vast majority tends to lose. So if you're just taking a broadly diversified portfolio of assets, we're likely going to not perform that well. Because here's the thing, crypto does not have any regulation. Everybody can launch a coin, and so there's no real barrier to entrance. And because of that, we tend to see a lot of fraud. We tend to see a lot of setups where tokenomics are rather poor, so where the average investor tends to not make money. And so when crypto cannot create money out of thin air, when it's actually a sophisticated system of moving money from the not so well informed to the better informed, then how can we become better informed over time? Because surely there's also a luck component involved, but there are some people that tend to win long term. Now, it's obviously not easy to become part of the minority. If we are not launching a project and we know more than the rest about that project, then how can we still become insiders? I think the best answer is to try to figure out what the insiders are doing and then simply copy trade them. For example, over here, we've got the Martini guy, and he bought the Chippy token when the market cap was still at $455,000. Now have a look at the comments on that wallet signal. The Martini guy tweeted about Chippy 2 hours after he has bought himself. And so since we are in a market without much regulation, and since we are in a market that does not produce any wealth, it's just transfer from one to another, it's all about figuring out an unfair advantage. And the unfair advantage of Martini guy is to simply have a following, right? He's just buying and then he tweets about it, and then the price goes up by more than 50% in just a few hours. Here's, by the way, his YouTube channel. He's got 150,000 subscribers. And so when we know what the insiders are doing, when we know what the influencers are doing, we can replicate those trades. Now, the art is in finding the right wallets. And we are tracking 12 wallets of Martini guy. In total, we are tracking more than 500 wallets. So 12 are by Martini guy, but we've got a lot of other influencers as well. For example, check out this signal over here. This is YouTuber Jesse Eckel. He bought $10,000 worth of the winner token on the 2nd of May. And surprise, surprise, on the 6th of May, he published a video about the winner token. And so, of course, the price also appreciates in the top by almost 50%. And so really, it's a game of attention. It's not a game of fundamental analysis. Most YouTubers, they simply just buy the asset and then they promote it on their channel. And then later on, they might sell it at a higher price. Don't get distracted by all the noise. We're also following Alex Becker, for example. So we've got 12 of his wallets. We are tracking Crypto Banter. We've got 33 of their wallets. And here we've got Brian Young, who, by the way, bought the virtual token extremely early. And we've got 5 of his wallets. So how do we get all of that data? How do we know what influencer holds what kind of wallet? And how can we then create those signals that we can actually buy and sell with them? The answer is through on-chain analytics. So there are several approaches. We can, for example, look at what kind of NFTs does somebody hold. We can then see, are there maybe potentially deposit addresses on centralized exchanges? Did other major deposits happen to the same kind of wallet? Are those wallets potentially connected? We can also look at prior purchase histories. So let's say we've got an influencer that talked about very small altcoins in their Twitter or in their YouTube. And then we look at wallets that held all of those altcoins and that potentially bought them also before the tweet or before the YouTube video. Then we've probably also got the right wallet. We can then afterwards confirm this, right? We can look at what is the wallet buying next. Is there again another tweet or another YouTube video on this? If the answer is yes, it's probably the right thing. We're then continuing to track it. And so I've made an entire video playlist on how to find different wallets and how to track them, how to then get the signals and how to interpret the signals. And so our entire community is trying to find new wallets, discussing this in the wallet research channel. And then once we found an agreement, we add this to our influencer trade tracking channel. And so the idea is pretty straightforward. We're trying to generate as much outperformance as possible that in the end, the membership more than pays for itself. Now there is some funds needed, right? We can't just trade with a few $100. I think the best portfolio has at least $5,000. Once you are at 5,000, you should be able to make that money back. Now, if your portfolio is larger, then you can consider to potentially sign up for yearly as well. First of all, there's a discount involved. So there's $250 off. But secondly, there's also a 1-hour free Zoom call. So in case you've got a larger portfolio in crypto, but also outside of crypto with other asset classes, and you could benefit from a direct one-on-one call, the yearly membership might be for you. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.